Okay, good morning and welcome back everyone to our thematic investment series. My name is Tony Zhang. I'm the chief strategist here at OptionsPlay. And today we're here to talk about space, the final frontier. And space, the ticker space, Virgin Galactic, is actually probably the company that is getting the most press and the most headlines in terms of this particular thematic investment series. Yet when we dive into the industry, space, Virgin Galactic, is probably the least interesting of these particular companies, but there is a whole industry around space. So today we want to dive into that industry and understand what are some of the investable trends. Before we get started, what we are going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any of the securities that we're going to discuss here during today's session. So we're going to start off by just taking a look at the overall space industry and roughly what has really shifted here over the past couple of years and how that has grown this whole industry around space that largely has been in the hands of governments for the most part, but now private industries are getting involved, and the support of those growth of those industries is really part of what's very interesting about this particular theme. We'll talk a little bit about the market drivers and the industry trends that we're currently seeing from space. We'll discuss some of the space ETFs that you can invest in for those of you that perhaps do not want to invest in individual companies or do the research and you're looking for just an overall way to get exposure to it. And then we'll take a look at the technical and fundamental factors of some of the top space companies here at the very at the current time, and open this up for Q&A here at the very end. So the primary thing that I want to walk away, everyone who's watching here to be able to walk away from, is a clear understanding as to what are the primary investable trends in the space industry over the next 5 years. So my name is Tony Zhang. I'm the chief strategist here at OptionsPlay, and my team and myself have put together a fairly in-depth review of the space industry, the specific companies that have exposure to the space industry, and both technical and fundamental factors as to what we think is important for investing in this particular vertical or space, if you will. So if we look at the space economy, this is really where we start to expect, we've seen quite a bit of growth here over the next, we expect a fair amount of growth here over the next few years. We'll really expect this to start accelerating here in about 2025 or so. So we're still in the early days, if you will, of the exponential growth of the space industry, but we're already starting to see quite a bit of smaller companies see some fair amount of acceleration in terms of growth here. And those are some of the really interesting plays, I would say, here at the moment. You have some very, very large established players in the space industry that are being turned upside down, if you will, from some small private industries. A lot of the private industries are not yet publicly traded, but there are quite a few that are. So those are the ones that we are going to explore here today. But one interesting growth here is really, along the lines of consumer broadband. Broadband is not widely available around the world, and space is really one of the leapfrogs, if you will, for this particular industry. So telecommunications is actually surprisingly one of the large beneficiaries of this particular change or shift, if you will, in terms of our industry. So when we think about space, I think most of us think of traditional things like lunar landing, deep space exploration, satellite launching. These are the types of things that we usually think about when we refer to space. But really what's becoming more and more interesting is satellite internet is something that is exploding in terms of use from a commercial perspective. And whenever there's a now commercial aspect to it, that's when things, I think, get really interesting from an investment perspective. We're also talking about, as more and more satellites get launched, space debris. How do we deal with that? Space tourism, which is really what's been in the news. But manufacturing is actually a really big part of the research that we have conducted. All the companies that supply the parts that are needed to launch more spacecraft. We're talking about launching 10 times more spacecraft in the next 10 years or so to keep up with these applications for space. So that's really some of the things that we're going to talk about. And one of the, just to talk about some of the drivers of this, one actually interesting driver that I don't think we anticipated is really the relationship between space and climate change. When we talk about climate change, a lot of the research and tracking of it is done from space. This requires more satellite imagery and satellites to be able to track the climate change that we're seeing around the world and how to deal with it. A lot of that technology is actually coming from space. We also have this orbital debris. This is becoming more and more a bigger issue for satellites and new launches. And there's right now, we don't have a great solution for this in order to track, in order to remove space debris. But that's going to become a new growing industry in space. Historically, that has not been there. Space and security is another big one, as we know that international governments or governments around the world are now interested in securing space, if you will, from a security standpoint. That is a relatively new development in terms of how governments spend for space, not just for research purposes, but now for security purposes. And like I said, telecom is actually a very interesting application for it because of broadband as well as maritime use of communications. Satellite is really one of the best applications for it. So this is something that we are looking at in terms of investable trends here in this particular space, and that's continuing to grow. This list is continuing to grow that simply did not exist 5 years ago. So these are some of the things that we're currently taking a look at. Satellite broadband is really one that has been growing quite rapidly. For those of you that are familiar with Starlink, which is what Tesla is probably most famous for in terms of SpaceX, we've seen quite a bit of growth here in terms of revenue growth for SpaceX. Now, SpaceX is a relatively new player to this particular space, but they have turned the industry upside down, not only from a perspective of launching satellites at about a tenth of the cost of what other more established players are charging, and that has exploded the speed, if you will, of launching of these broadband satellites, not only by SpaceX but also by other companies. So this is really some of the more interesting, I would say, applications of what SpaceX, and now you have Richard Branson and Jeff Bezos also getting into the space race. Reducing the cost of launching a satellite has had a significant material impact on the speed and trajectory of this particular industry. So as these private billionaires decide to get into the space industry and reduce the cost of getting into space, this has accelerated the growth that we have seen here in this particular industry. And we're just very much in the very early days of that, because Jeff Bezos and Richard Branson's rocket companies right now are not doing anything on the commercial side. SpaceX is, they are the first, and they are simply changing the landscape of launching satellites. So a lot of the growth that we continue to see here is going to be as a result of that. And this really, I think, shows you the speed at which we're starting to see growth in terms of satellite launches. This, I would say, largely is attributable to what SpaceX has been doing and what Elon Musk has done in terms of changing the cost of a satellite launch. This is really where we expect to see a significant acceleration in terms of the number of satellites launched. And this, in order to keep up with this growth, this is really where it's not the satellite companies themselves that we think are interesting. It's all the manufacturing, it's all of the production, if you will, of these rockets, if you will, that is going to be necessary in order to fuel this growth. And all the industries around the manufacturing process is what I think is most interesting in the short run right now. And then as you go further out in time, you're going to have more and more space debris. We're going to have to deal with that. and some of the industries around that. Those are not even investable themes just yet, but those are ones that are coming up on the horizon. But we'll explore some of these themes here in today's session. But largely, this is really what's interesting, is that the civil use of satellites is actually what's anticipated to be larger than the defense side. Historically, defense has always been the larger spend, if you will, but civil is now expected to increase quite substantially here, whether it's satellite broadband use, even space tourism is included in this, in terms of how we utilize space. So let's just talk about some of the ETFs that you can immediately use to gain exposure to this particular industry. So ARK, Cathie Wood's, probably right now one of the most famous stock pickers right now, has a space exploration and innovation ETF. This currently has about just shy of $600 million of assets under management. I do encourage investors, before you invest in any ETF, look at the holdings of an ETF before you buy it. Now, this particular ETF does have a lot of the companies that we are going to discuss here today, but it also has quite a few non-space related, if you will, like Amazon and Google and things like that, that have in some way, shape, or form low amount of exposure to these companies or to space. So just be aware of what you're investing in when you're trading these. Cathie Wood's funds have not been particularly very strong over the past few months, especially as interest rates have kind of climbed a little bit since February. Right now, it's trading near the bottom end of the range. I would simply look for to make sure that 110 as a support level holds. I think that if you see a break below 110, that would be concerning to me. That would target 100. And if it breaks below 100, that would be even more concerning. So just be aware of the companies that you're investing in and be aware of the technical levels. It is approaching a technical support here around 110, but I would wait for a bit of a bounce here, a confirmation that this support level is holding before looking for exposure here in an ETF like ARKX. Another ETF here is UFO. This is Procure's Space ETF. This ETF has fewer assets, $123 million in assets. So just on the cusp of, I would say, being profitable. So a little bit riskier in terms of an ETF, higher expense ratios. And it does also have roughly this, very similar type companies as the ARKX ETF. It has performed substantially better here since February. As you can see, has not sold off as heavily as the ARKX, and it's now trading near the bottom end of its range here as well. So looking perhaps for more range bound until it can potentially break out here. This does look like a very classic continuation pattern. This is an ETF that rose from $22 all the way up to $30. So we're talking about almost a 50% return after such a strong period of performance. You tend to have a period of rest, consolidation before you see the breakout here. We have not broken out yet. But from a technical perspective, this looks like a classic continuation pattern for this particular industry. So both of these have a fair amount of exposure to some of the satellite companies that we're going to talk about here, a lot of the manufacturing companies, space technology, ground equipment and manufacturing, satellite imagery. All of these, generally speaking, have been added to both this UFO and ARKX ETF. So both, I think, are reasonable ETFs to gain exposure to this specific industry. There's not every single industry has ETFs that I think have a great exposure to the specific industry. Many times you get a lot of junk in an ETF that doesn't give you a full exposure to the industry. In these two cases, I actually think both of them do a pretty good job of giving you exposure to the companies that we're going to discuss here today. So we're going to start off broad. We're going to talk about some of the major defense contractors that have been established players. General Dynamics is certainly going to be one of those names that we're going to talk about here. This is a fairly diversified aerospace and defense company. They make everything from private planes to a lot of the manufacturing and electrical parts that are needed for space travel. And you are effectively getting exposure to it through the communication components that are used in space flight and satellites. So as we refer to the growth in satellites that we're expecting here over the next 5-10 years, General Dynamics provides a lot of the electrical parts of those satellites, as opposed to being an actual space company per se, as some of the other companies that we're going to discuss, like Lockheed Martin and Northrop Grumman, that actually produce space flying equipment, if you will. General Dynamics is an interesting company from the perspective it does trade at a reasonable valuation, 17 times earnings. Currently, it's not a very, I would say, sexy company from the perspective you were expecting about 4 to 6% revenue and EPS growth, but it's a very steady growth company. As you can see from the chart, the stock is a very strong uptrend and has actually continued to exceed its February highs and recently broke out above 195, came back to retest this level as support, and potentially has a good opportunity for a long position here in General Dynamics. Now, keep in mind, they generate about 75% of their revenue from either US or foreign governments, but they also have a strong commercial aviation business. This is really part of what the strength from this particular stock has been, in my opinion, over the past year, is the strength of that commercial aviation business rather than the growth that we've seen from their space business. So this is one that's, I would say, a smaller exposure to space, but certainly a critical aspect of satellites growth that we're expecting here from General Dynamics. Has a strong balance sheet. We're expecting a fair amount of share buybacks. So I would say this is the type of company where you get a medium amount of exposure to the space industry. Now, shifting gears a little bit, talking about that manufacturing side. So General Dynamics is certainly the largest, I would say, out of the manufacturing play, meaning the bits and pieces that are required to go to space. General Dynamics is a big player in that particular space. But let's talk about some of the smaller players, some of the more interesting, higher growth opportunities. So 3D Systems, there's two major 3D printing companies that are publicly traded that have a strong amount of aerospace/space exposure. The larger of the two is 3D Systems. They're actually fairly simple, comparable in terms of size. They generated about $600 million in revenue over the past 12 months. They're currently trading at about 5.5 times sales. So a bit on the expensive side, but certainly not crazy like what we've seen in many other industries, like the tech industry, where we see 20, 30, 40, 80 times sales. So 5.5 times sales, I think, is a fairly reasonable multiple to be trading at. They produce a lot of the 3D printing. They provide 3D printers. They also provide on-demand custom parts. And this company grows quickly right now. Small companies grow quickly, obviously. 17% expected revenue growth here. And they recently just turned profitable in 2021. So it's not like one of those smaller, high-growth startups that are losing a lot of money in order to gain market share. They are profitable. And that's what makes it so interesting for me. Out of the two major players, which I'll show you the second one here in 1 second, 3D System has a more focused approach. They are focused predominantly on industrial and healthcare applications. The industrial side of things, meaning as they produce parts for industrial manufacturers, as well as space satellite systems and healthcare, those are the ones that they focus on. They've seen a higher amount of growth by focusing on these two industries rather than basically applying them their expertise to all industries, which is what the second company does. And they provide custom and replacement parts for aerospace and defense manufacturers, predominantly used in satellite systems and for the US Air Force. So this is, I would say, when you think about manufacturing, and this is an interesting industry to dive into as well. 3D printing in itself, I think, is a very interesting thematic investment series. There's just not a lot of companies that operate, certainly not a lot of public companies that operate, but 3D Systems, if you just think about manufacturing as a whole, 3D printing is an interesting shift in manufacturing, because most manufacturing is taking a chunk of metal and basically carving out what you need from it, or what we call subtractive manufacturing. 3D printing is only printing what you need, or additive manufacturing. It's a complete shift in terms of how we manufacture. So there has been there has been a strong growth in this particular industry, but specifically for aerospace, another company that's privately funded that we cannot trade recently just launched the first 3D printed rocket for ULA. So there's clearly a shift in space and the needs for 3D printing in order to build parts very quickly. And 3D Systems certainly is going to be one of the companies that benefits from this particular industry's need for 3D printing and rapid prototyping. So 3D Systems is the slightly larger of the two, but I also think slightly more interesting one. The other one is Strategist. They generate roughly the same amount, $550 million in revenue. They trade at about half the valuation, about 2 times sales. And I think, from my perspective, these two companies are very, very similar to each other. Stratasys also owns MakerBot. Some people might be familiar with that particular company. If you've ever had a 3D printer at home, you're most likely to have maybe a MakerBot at home. So they have recently acquired quite a few companies to grow their portfolio. But the revenue growth here is just a little lower than what we're seeing from 3D printing, 10 to 13% revenue growth expected. They are also expected to be profitable at 2021. So, both of these companies very similar in terms of revenue growth, very similar in terms of profitability here at the moment. One trades at half the valuation, slightly lower growth, but provides roughly the same services to manufacturers. Stratasys, I will say, has a much more diverse client base, if you will. But they are one of the providers of 3D printed parts for Lockheed Martin's recent Orion capsule, which we will talk about here in 1 second when we talk about Lockheed Martin. But when we talk about 3D printing, it's all about rapid prototyping and being able to produce parts fairly quickly, new parts very quickly, as opposed to the very expensive machining that used to be required to build a new part. So especially parts that don't need a lot of volume, meaning if you just need a single part, the manufacturing of that single part is historically very expensive. 3D printing changes that substantially. And this is also part of what's fueled this particular industry, is the advancement of these additive manufacturing processes that 3D printing now allows for rapid prototyping in a much, much cheaper state. And part of what SpaceX's success comes down to their ability to reduce the cost of manufacturing by vertically integrating it. It's the same thing that Virgin Galactic is doing, meaning they're building everything themselves as opposed to sourcing all of their rocket parts from all of these different companies, each company putting a markup on each part. And that's part of what makes historically space travel so expensive, is because the number of vendors that are required to build a rocket was so high, were so many. And each company that provides that part needs to make their profits. And ultimately you have the manufacturer has to pay substantial markups for something that is a very low volume part. Low volume parts have been, to some degree solved by some of these 3D printers, where they can print something. It doesn't matter whether you're in one of them or 10,000 of them. The cost for a single unit is the same. And that's really what's changed about this particular industry. And so I think 3D printing and Stratasys are both really, really interesting applications for space that have nothing to do with the space industry in itself, but one of the foundations, if you will, that allow the space industry to thrive. And then what I'll do is I'll talk a little bit about Virgin Galactic, because again, this is usually the headline company that we think about when we think about space, because it's getting all the headlines. It's the first of the major 3 competitors in this particular space for commercializing space travel or suborbital travel at the moment. But this is also the one that's most puzzling to me. This is truly what we call the pure space play, right? Because you're effectively just paying for, or you're investing in a company that's sole purpose is to bring people to space. First phase of Virgin Galactic is suborbital space. That's what Richard Branson went on last month, where he went just shy of a full space and came back he was out there for a few minutes, came back down. That's what they're selling for, about $250,000. It's going to increase about $450,000. But eventually they want to do full orbital space. And they also want to eventually do point-to-point travel, where you can basically launch from New York and land in London 30 minutes later. It's an interesting concept, but remember what you're investing in. This is a company that generated a total of $571,000 in revenue in the last 12 months. That's almost nothing for a company that's currently trading at $6 billion. And I had to do this calculation twice because I knew that the valuation was insane, but this is a company that currently trades at about 10,000 times sales. We talk about 100 times sales, 120 times sales as just completely ridiculous. But this is a company that trades at 10,000 times sales because it generates no revenue. And the other thing that we recently just found out a week ago is that they're going to be delaying their first suborbital commercial flights to late 2022. They were supposed to be doing this in Q2 of 2022. Now it's being pushed out to Q3, Q4 of 2022. And there's been very little information about that. So there are some concerns right now still about when we can even see some revenue for this type of company. And just to look out here, even for projections, we're only expected to hit about $1 billion in revenue in 2030 and about $2 billion in 2035. Yet we're valuing this company at $6 billion at the moment. This is really where I just think fundamentals and reality have just completely decoupled from each other. And they're expecting to charge somewhere between $450,000 to $600,000 a seat once they are fully up and running. The question is really, how much interest can they generate from this? And are they actually going to be able to hit these targets of 2030 by full orbital and 2035 of point to point? I think point to point is probably where you have the most interesting business model, but this 2035 is a pretty lofty estimate that we really can't validate at all right now. So this is really some of the risks that I see with investing in this type of company. And it's a lot of volatility in this company, despite the great news from a couple of weeks ago or a few weeks ago when Richard Branson went into space, the stock is now worth half as much, right? Because again, it generates no revenue and has really no path to profitability anytime in the next decade. So for those reasons, I think that this is one that I personally would stay away from. So looking at some other companies that I think are worth taking a look at are the defense companies. And I think that if you want exposure to space, you have to look at some of the defense companies because these are the companies that generate a fair amount of revenue from actual space. I think that when you look at your portfolio of space, there has to be a portion of it allocated to companies like this, like Northrop Grumman, generates about $37 billion in revenue. So one of the largest defense contractors in the world, trading at a fairly reasonable multiple, 14 times next year earnings. And these are the types of companies that generate almost 100% of their revenue to government contracts, which means that, you're not susceptible to economic swings. The COVID is not really a concern as much to investing in these types of companies. But what's very interesting for me, or at first when I looked at these companies, I was thinking to myself, space is going to be a small percentage of the overall revenue that the company generates. They're a huge defense contractor. Space is an emerging industry. But when we dove into it, space actually contributes a fair percentage or surprising percentage of total revenue. 22% of Northrop's revenues derived from space. And more importantly, it is the fastest growing segment of their business. In Q2, they grew 34% year over year in the space industry, 32% year to date. So this is really one of the fastest growing segment of these types of companies, which is what makes it so interesting for me. And usually when we look at these types of themes and we look at the big established players, it's usually a small percentage of their revenue that's derived from it. It's not seeing a lot of growth, but it's not the case here for some of the ones that we're actually going to take a look at here. And when we talk about space from a security perspective, not just in terms of launching satellites, that's really where the defense contractors come into play. And the government spending on this front is likely going to accelerate over the next few years, especially as cybersecurity and space are the two new frontiers in terms of governments and security and defense spending. So Northrop Grumman at the forefront of this, out of the major ones, actually the ones that is actually growing the fastest on this particular space. So out of the major, between Northrop and Lockheed Martin, Lockheed Martin is a bigger company. They trade at very similar valuations. Lockheed Martin is larger because they generate $66 billion in revenue versus about 35 for Northrop. Trades at roughly the same valuation, 14 times next year's earnings. And they have also a fairly interesting or sizable percentage of their business generated from space. 18% for Lockheed Martin is generated from space. But this is one that's growing a little slower, 10% year-over-year revenue growth. And that's why I think Northrop Grumman is the more interesting player between the two. They're smaller, a larger percentage of their revenues generated from space, and they're growing their space revenues faster than Lockheed Martin. So the bigger company is growing at a slower pace, not too surprising. But the one thing about Lockheed Martin is that they do have the Orion multi-purpose crew. So when we refer to what SpaceX is doing with building reusable rockets and being able to launch astronauts to space in a much more cheaper fashion than what United Launch Alliance and Boeing used to charge or are still charging, this is really where Lockheed Martin is also edging in this particular space of reusable multi-purpose crew vehicles to get people to the space station or get people to astronauts to space and back in a relatively reliable and reusable, which is cheaper method. So Lockheed Martin also plays in that particular space beyond just the defense side of things. So this is really where Lockheed Martin is a slightly different player than Northrop Grumman, but it is a lower growth play, if you will, but trades at a similar valuation. So because the valuations are similar and one grows at a faster pace, my preference here is for Northrop Grumman over Lockheed Martin. And then you look at Boeing, which is the other big player in this particular space. Very similar revenue numbers, about $61 billion to Lockheed Martin, trades at about 2 times sales. And the only reason we're using sales here is because Boeing has really struggled with profitability here. So you really can't apply an earnings multiple to this. And Boeing actually has been a leader in the space industry. They had the Starliner program, but recently we just learned, actually about a week ago, there's been a new delay in the Starliner program. They were supposed to fly in August 2021, but now we're learning that it's unlikely to fly in 2021. And this really reflects, I think, a larger problem in Boeing's ability to engineer, as we see with a lot of issues that we're seeing here on the aerospace side of things. The Starliner program is continuing to lose ground to SpaceX. Boeing and United Launch Alliance were the two companies that the US government used to go to launch satellites, to launch astronauts to the International Space Station, aside from the Russian companies. Well, Boeing is really falling behind in this particular space. Starlink was, which is what Elon Musk's SpaceX company has been doing, has really been running circles around Boeing on this particular space. So this is really where I do think that we have some concerns about Boeing's ability to stay relevant in the space industry. There's no doubt that they will be part of it, but they are certainly losing ground to both Northrop, Lockheed Martin, and even smaller players like SpaceX here at the moment. Normally, they generate about 26% of their yearly revenue in this particular space. But I will say space is only a portion of the 26%. Defense and security is part of it, but space is only a smaller portion, if you will, of Boeing's revenue. And the management's current focus on the commercial aerospace business with the 737 MAX, with the 777X, that's clearly has shifted priorities here from Boeing away from space and defense into the commercial aerospace business, which is a very largely profitable part of their business. And it's understandable that they spend their time focusing and prioritizing on the commercial aerospace business, but it's clear as to what that is shifted in terms of priorities and the fact that space is not as high of a priority. And I think we're seeing it in the consistent delays we've seen in the Starliner program over the past 2 years or so from Boeing. So especially if you look at the chart here, Boeing recently breaking below this 220 support level here. This is concerning after having what has been quite a few months of growth in terms of the company, especially as commercial aerospace continues to come back, if you will. But we're starting to see a fair amount of weakness from the airline companies, and we're starting to see some further weakness from commercial aerospace players like Boeing. And lastly, what I want to talk a little bit about are the satellite companies. There's not many of these that are publicly traded, but Viasat certainly is one that I think is an interesting proxy for the growth that we're expecting here from satellites. They are some of the producers of satellite and digital communication products. So if you've ever been on a plane and had to use Wi-Fi on that plane, especially if you're on an international flight, those were largely powered by this particular company, Viasat. And Wi-Fi on a plane certainly has changed connectivity and is an interesting application of connectivity, but broadband connectivity across the world is actually quite unreliable. And satellite companies like Viasat, like SpaceX, are trying to change this. They're trying to put continuous 360-degree satellites up in the air or up in space so that there's a continuous access to broadband covering the entire Earth. Is kind of what Elon Musk's vision is for SpaceX and what they're doing with the broadband communication side of things. Viasat was certainly the first player in this particular space, currently generating about $2.5 billion in revenue, trading at about a very reasonable 1.5 times sales, I would say. And they continue to upgrade their systems to increase broadband speeds. So I would say Viasat has a lot more experience in this space, but SpaceX is catching up very quickly. But these are the types of companies that are growing extremely quickly. 25% revenue growth expected this year, 50% EBITDA growth expected this year. So growing revenues and earnings substantially versus any of the companies that we looked at here today. This is probably by far the fastest growing company of all of the ones that we've looked at. So when you're growing revenues and earnings that quickly, that's the, I would say, attractiveness of some of these satellite companies. Viasat currently trading between this $46 and $54 area, recently trading near the bottom end of the range and perhaps looking for a better opportunity from a risk reward perspective on a long. And if we could see a breakout here above this level, especially the 200-week moving average, that's where you can potentially see some further upside here from a company like Viasat. But especially, like I said, the most important application here for a company like Viasat is really on the commercial side in the short run. They have government contracts, and I think those are going to be incredibly significant to their revenues in the long run. But in the short run, when you get on that plane and you're paying $20 for Wi-Fi on the flight, now a large percentage of that is going to satellite companies like Viasat. And it's a very high margin business, especially as the cost of launching satellites come down. This is really where Viasat has a leg up. They have more satellites up in the air than anyone else at the moment in this particular space. But like I said, SpaceX is catching up. And that's really where I think things in terms of competition can heat up and be quite interesting. So with that covers the range of space-related companies that we have researched. And hopefully this was helpful in giving you a broad-based understanding of the industry, some of the companies that are supplying the growth of this industry, and the type of companies that you can look at to gain some exposure to this new industry that we are seeing a lot of interest in from Virgin Galactic making those headlines. But if you look underneath the surface, there are a lot of other companies that I think are far more interesting than than Virgin Galactic looks at the moment, which just looks quite ridiculous at 10,000 times sales in terms of the valuation that it's currently commanding. So with that, that covers what I wanted to share with you here today. What we'll do here is we will send out the recording along with these slides after we finish here today. And I have included a survey in the recording link for today's session. And I hope that for those of you that are watching our sessions every single week, whether it's these thematic investment series, the options education series, the Tuesday morning market outlook, please send us your feedback about these sessions. What do you like? What do you don't like? Give us your feedback, because we're trying to continuously change the format of these sessions to give you what you are looking for as members, and we want to solicit your feedback. So we'll be including that survey in today's recording email. Please, if you have a few minutes, fill out that survey. It's going to help us improve these sessions so that we are always providing the best possible service to you guys as members. So with that, thank you so much. I hope you guys have a great trading day, and I'll see you guys here next week on our next market outlook session and on CNBC later tonight. Have a great day.